January 11th, 2015. First stock I want to look at is Twitter, because Twitter had a really good week last week when the market was kind of shaky, and it is getting back into this kind of consolidation box that I've had on my chart for a while. And you can see this was from a gap down in late October off of earnings. This box got drawn here, and then you kind of started to break below that in early December, but you've put in a little base here and you are pushing back above the bottom of this box, getting back into this range and getting back above psychological resistance at 40 bucks. So I like the setup on Twitter. I think it's really simple. If you are staying above 40, then Twitter's going to be able to rally. If you're staying above 40, Twitter's going to be able to rally. If you break back below 40, you have key support now at Friday's low. I considered Friday a breakout. You had good volume on Friday. So to keep that breakout valid, you need to stay above Friday's low, the 38.25 area. You could just call it 38 bucks to keep it even simpler. So hold above 38. I like Twitter as a buy on dips. Best case though is holding above 40 for the momentum trade, and you can go significantly higher on Twitter. If you were to break 38, the 38 area, you can start to have a short trade back in Twitter with really critical support down at 37, the January 7th low, back below 37, and I expect Twitter to be able to test the lows from December between 35-ish and mid 34s, 34.60s. So first things first on Twitter, what does it do at 40 bucks? If you hold it, you've got momentum to the upside. If you go below it, you can pull back a little bit, but I say buy the dip as long as you hold 38s. Below 38, you can start selling off again. Upside targets, you've got key resistance at the late November high, right around 42 bucks, and then the base of the gap down from October is between about 43 and 43.50 and 45 bucks. So those are some upside targets to look at. Lower price stock here that I know some of you have your eye on, ARNA, A-R-N-A, pharmaceutical name, broke out this week on very heavy volume, over 100 million shares. So really nice volume here. And you also got above a psychological level in the form of 5 bucks. So, you know, ARNA, if you're a small cap trader looking for dollar stock trades, ARNA should be on your radar. I think that you've got a good trend play potentially now as long as you can stay above 5 bucks. Anything above 5, and I like ARNA to the upside with key resistance at last week's high between 6 bucks and 6.50, but as long as you stay above 5, I look for that resistance to get tested, and then above that resistance, $7 to $8 would then come back into play. If you lose 5 bucks, then ARNA can start giving back a good chunk of that move from Wednesday. You know, 4 bucks down to 3.50 comes back into play. So a nice psychological setup to me on ARNA, just relative to 5 bucks. Another one of my names that I like here from a setup perspective is Amazon. Amazon, last Sunday, you recall, we talked about Amazon committing below 300 bucks, and that creates a simple setup. If you're just able to get commitment below 300, this thing could be in trouble, and that looks like what's going on here. You came below 300 on Tuesday and stayed below it for the most part Monday, Wednesday, Friday, closing near its lowest level since October, early November on Friday, and have started that commitment below 300 in my view. So I think, to me, you know, 300 now, anything below 300 maintains a short bias on Amazon here, and the key area is going to be the October lows. That's what I've got my eye on, right around 284. If you look at a longer term chart, on Amazon, this 280 area. I'm going to go to a weekly chart here. I've got all these trend lines, so bear with me, but you'll notice this 280 level, once you get below here, there's really nothing until 240s, 250s on Amazon. So from a longer term perspective on Amazon, you could be looking at a bigger breakdown here if you break down beneath 280. So 280s is where I'm looking for Amazon to test while below 300 bucks. I'm not interested on Amazon on the long side until it can get above this downtrend line. We talked about this last week. It's been capping the stock. It comes into this week around 315. By the end of the week, it will be down near 313. And by the end of the month, going into February, it'll be down around 310. So you need to start getting extension above 300, bust loose above this trend line to re-establish longer-term upside momentum in Amazon. I think Amazon is a good name on the short side as long as you're below 300. Another biotech name that I know a lot of you guys have been looking at, I'm seeing it posted about a lot recently in the trade room, is GILD, G-I-L-D. We talked about GILD, I think, last week. This big high volume gap down on a lot of money flow. You went from 105 down to 85, but you look at this thing, you have started to rally now and are back near 100 bucks. You broke into the base of this gap, so GILD showed a buy the dip, and I think that's something you got to make note of. Not sure that I would short GILD here, even though it has rallied nicely. I would have preferred to see GILD stay below 100 bucks if it was going to be a short trade. I think that you kind of hold off on any short trade until you break back below 100, and while above 100 you are looking for further upside here back up towards the 105 to 110 area, which is the December highs, and then above that 110 mark I think you see GILD go for new all-time highs towards 115. So GILD, I like where you're at on the chart, more so on the long side because of the nice bounce it just made. I think that's the market kind of telling you, hey, I'm a stock that when I go down, I want to come back up. This was kind of like a bungee cord, just whipped back higher. And I think you always got to make note of when you see action like that in a stock, really coming back up very quickly. And to that point, in the opposite effect, we'll transition and look at Google here. Google, is a stock that had gotten beaten down. You then made a nice rally, right, into the end of the year. But look how quickly Google just came back down. So Google kind of showing the exact opposite of GILD. Tried to show a bounce, maybe put in a bottom, but now, a week later and 45 points later, Google's right back at 500 bucks and back testing this psychological area. You've been making new one-year lows on Google, and it's just simple technical analysis. If a stock is making fresh one-year lows, it's not a great sign, and probably means you want to be staying on the short side more than the long side. So I like this Google setup relative to 500. Can it bounce at 500? Sure. But I think the action suggests that it wants to break down at 500 more than it wants to bounce and start rallying again. What would change my mind is if Google could get back above this 520, 525 area. The Tuesday breakdown, that kind of really triggered things to the downside here. You need to regain that. So if you do start bouncing off 500 on Google, you could have a nice window up towards 520, maybe 515, maybe even 525. But if you did get into that window, that's the range, then I would look at Google as a short. Another stock here, lower priced, similar to ARNA, talking about AGEN, A-G-E-N, Agenesis, biotech name. These biotechs seem to be kind of hot. So that's one point to make aside from this stock, is if you're trading sub $10 stocks, you want to think about the sectors that's working right now. Biotech looks to be working. We looked at ARNA. We're going to look at AGEN here. A lot of liquidity on Friday off of a gap up. And the first thing I want to point out is that the last time it gapped up really nicely, which was in the middle of December, you held that gap up. You never came down. You consolidated and then eventually broke back out again. Granted, that gap up in December, the volume wasn't anywhere near the volume you saw on Friday, so if anything, I think that maybe has a better shot at some continuation since the volume was so much greater. But overall, the takeaway is that you never went below the low from that mid-December gap, and that ended up setting up more upside. That low was 359, so what that does is it creates a good swing trade setup, in my opinion, versus Friday's low of $4.88. Maybe you give it a couple cents more, go with $4.75. Maybe you give it a couple cents less, go with $5. Just depends on your personal preference. Regardless, this area, as long as you're above it and holding it, I like AGEN to be able to move on up and test Friday's high up near $6. And looking at this chart more longer term, it doesn't look like there's a ton of immediate term resistance up here. Okay, you had a big run in February, got up February 2014, got up above $5, came back down, but you're above those prices now. So yeah, AGEN is at multiple year highs at least. I went back at least 2 years, not going to go back further, but you guys can. So AGEN, hold this $4.85 area and pretty good shot at new all-time highs. Or I shouldn't say new all-time highs. New multiple year highs on AGEN to me. So definitely be keeping your eye on this. A lot of liquidity for you small cap traders. Your number one priority should be liquidity. Okay. After that, it's about finding a stock that matches a setup you like. But AGEN and ARNA both have a ton of liquidity. Both of those around $5, around levels. So I like those setups relative to their simplicity. I think you can just look at them with a simple mindset, and to me, those are the best types of plays. Looking at Apple here. Apple, always a popular name. First thing I see on Apple is a kind of double bottom around the 105 mark from the December low, and then this low, at the beginning of the year, it came down to 105 again. And it's good to see 105 holding, because if you look back in the at the stock's resistance area from August to October when it was making new all-time highs, it struggled just underneath 105. 105 was definite resistance, kind of had a channel between 95 and 102-ish, 103-ish. Now you've come down, back tested 105 area a couple times here in the last month. You've held it both times, so we're seeing previous resistance back here now be new support up here. So I like that on Apple. However, that's the bullish argument. The bearish argument, you could say, is that ever so slightly you might be in the process of making some lower highs here. You take the all-time high up near 120, then you made a lower high at the beginning of December around 115, then you made another lower high south of 115 in late December, and now depending on what goes on this week off of this rally from that 105 level, you could be looking at another lower high on Apple here around 112-ish, 113, and you keep getting lower highs, that is going to make for a downtrend, and you might end up going down testing that 105 level again. So Apple's a good argument stock right here. What I mean by that is you could make an argument on the long side, you can start making an argument on the short side. Really up to you how you want to read it. That's the beauty of charts and stocks in general. They are like fine art. We can all look at the same picture and see a million different things. So my take though is, hey, the stock long term has been in an uptrend, but more recently the market seems to be struggling somewhat, and Apple seems to be out in front of that struggle. So therefore, if the market continues to struggle, then I think you see Apple ultimately break below this 105 mark and test 100 bucks. Apple seems to be very susceptible to underlying market conditions at this moment in time. So if you are going to trade Apple, make sure you're aware of the S&P and the SPY. And just to prove that point, you look at Apple started the year with a big drop, and we go over and we look at the SPY. The SPY started the year here with a big drop. You went from 205s down to a shakeout below 200. Then you had a big 2-day recovery from 200 back up to 205, right? Well, what did Apple do during those recovery days in the SPY? Apple went from 105 up to 112 with the market before going from 112 down to 105 when the market was going lower. So Apple very susceptible to broader market moves going on right now, so make sure you're paying attention to the S&P if you're going to step in and try and trade Apple. Those were the only points that I had in terms of charts. Those were the setups that I wanted to go over and the ones that I got requests on. I have one other thing that I want to point out from some of my own trading this week. But before I do that, if anybody has another ticker that you guys want me to look at, you can post it in the chat and I will do that. Alright, let's look at GoPro. GoPro kind of indecisive here. You're hugging 60 bucks. I think maybe you try and bounce that 60, but I'll tell you what I don't like about GoPro, and that is this rejection right at 70 bucks, which used to be previous support, now looks to have turned into resistance possibly. See, I marked the green as support on GoPro right around 70, where now looking like could be acting as some resistance, got rejected right there, and you are back testing the $60 mark. I think, if GoPro starts losing 60, then that $50 level starts to look like a magnet. It's right around the recent lows from December that you just came off of, and it just seems to be struggling. It made a good bounce, but for as much as the stock got beaten down over the last 3 months off of that October high, I would have thought it'd be able to hold that bounce a little bit better. So my reaction is, hey, something's not right here. You should not have come back down off of that 70 test. You should have been able to consolidate up there. So GoPro could be in trouble, but I'm not going to sign off on that until you get confirmation back below 60 bucks. Gotta come below 60 here. This line right here. If you do come below 60, then I think you look at GoPro as a short and look to maybe get aggressive for a 55 to 50 target. Longer term, I do like GoPro closer to 50 bucks. I have some IRA orders in, good till canceled, to buy the stock at 50 as well as at 45. So if GoPro does shake out below 50, I'll be a buyer, but that's from a longer term perspective. On a shorter term perspective, if you're breaking below 60 and you go towards 50, obviously puts are going to be paying out nicely. So let's see what happens at 60 here early this week and then try and go from there. But to me, again, longer term momentum side, until you get back above 70 bucks, GoPro is going to be vulnerable and the door will be open to a flush below 50. Any others? Netflix, I didn't go over Netflix because it's still pretty much within the range that it's been in the last few weeks, been consolidating. Need to get commitment below 330 to 325 to start setting up for a breakdown. Got to get back above 350 for upside. The other thing about Netflix, earnings are a week from Tuesday. I'm not big on predicting earnings moves, so I think once earnings come and go and we see how the stock reacted to it, it'll be easier to come up with the outlook on Netflix. But right here, you're kind of trapped between a rock and a hard place. You've got this support down at 315 that you haven't been able to really break, and you've got resistance up around 350 that you haven't really been able to break. And when you've printed above 350, it hasn't been very strong. When you printed below the October low of 331, it hasn't been incredibly weak. Yes, you broke below 331 and went down to 315 in the middle part of December, but you bounced right off of that one day later. There was no sustainability to that down move. You need to get some sustainability. It's been a couple years since Netflix has had, well, not a couple years, but it's been almost 1 year. The last time Netflix had really good sustainability to the downside was back in March of last year. If you look at the chart, when I talk about sustainability, for instance, you had some support at this area here. And that was around 400. Once you broke below 400, 420-ish on Netflix in late March 2014, you really flushed out, going from 420 down to 300 in a span of a month and a half. That's sustainability. That is a really good move. I think what might have made Netflix a bit choppier recently is the fact that the big move happened on a gap down, right here. So maybe that took away some of the sustainability factor, because yeah, you look at Netflix over the last 6 months, it's down 20%, I believe. The problem is nearly all of that 20% down move happened in an after-hours session in reaction to earnings. And if you just look since that earnings report, you think about this. October 16th, Netflix traded between 331 and 366 on earnings. If you look at the stock now, over the last 3 to 4 weeks, nearly 90% of the days, in fact, over the last 1.5 to 2 months, 90% of the days starting since November 25th have stayed in that 331 to 366 price range. So this same range that you were in on one day on October 16th, you just haven't really been able to get out of. So Netflix needs to get out of that range in order to really start piquing my interest and have me expecting some volatility. But it might be happening here. We are at 329, starting to maybe get below 331, but I need to see some better speed. I need to see some solid down movement early in the week. And now that I'm just hearing myself talk, I just got a funny feeling. I'm sitting here saying Netflix doesn't really pique my interest. So now I kind of got a funny, strange feeling that, hey, maybe Netflix sells off this week and, is like, oh my God, why didn't I trade Netflix? But I'm weird like that. Sometimes I just get those gut feelings, and I just got one of them right now. So all of a sudden, Jordan, thanks to you, I'm thinking maybe I should keep a closer eye on Netflix this week. Alright guys, so I want to go over a trade I made on Friday. I'm not going to dive into the whole trade, but I want to dive into one of the execution points behind it, because it's something that I don't always do and I don't do enough of, but I did it on Friday and it really worked out pretty tremendously for me. So I was trading Tesla. Just going to jump forward to try and find the footage here. You guys all see this picture clearly. You should see a snapshot, a video player snapshot of my platform. Okay, so this is Friday's trading, and Tesla was going down a little bit. and I want to go to the 9:35-ish mark. So right here. Okay, so I'm going to click play and just kind of talk through some things that are going on. This won't take long. I just want to point something out tactically that I did that allowed me to be in a really good spot that I want to try and do more of. Because anytime you review something, and we should all be reviewing our orders, I have the benefit of being able to review film, you should go back, examine, hey, what worked, what didn't work, and if it worked, why aren't you trying to find more ways to do it again? So when I was watching my film this week and I looked at this that I'm about to show you, and I was like, hey, that was fucking awesome. You need to do more of that. So at this point right here, I've clicked play. See, this is live footage from Friday's trading. You can see I am trading the Tesla 210 puts. You can see my position. I've got one contract at $2.93. I had sold one, locked in some profits, and I'm thinking about selling another one right here as the stock is testing the 206 to 205 mark. And I do put an ask at 280 right here. Okay, and I've filled at 280. Now what I want you to pay attention to is what I do within seconds of filling at 280. You see that? I downticked my order, okay, or I downticked my next order to $3.10, and I immediately place a buy order at $3.10. All right, so I just paused it for a moment. As soon as I filled my sell order at $3.80, I knew, and I was just reacting, hey, if I can get back in at $3.10, I like that entry. There was no hesitation. I just put the order in, and now I'm sitting here trying to buy back a contract at $3.10 after selling at $3.80. This is something that I think I need to do more of, placing a bid to buy back as soon as I sell. We call it flipping, trying to flip your position. Clicking play again, and you'll see that I end up getting filled here at 310. Right there, it took 5 seconds. I'm going to rewind that. I mean, literally, it wasn't 5 seconds. It was more like 15 to 20. But had I never placed my bid here, there's no way that I would have filled. Had I not placed my bid at 310, I'm not getting filled right away. And I'm struggling to get back in. So here's rewinded. I still have the contract here. You can see it up here, position one contract on ask at 380. The trade just went through. Now you can see me downtick my limit price here from 380 down to 310 within 5 seconds of selling at 380. I'm starting that process. 5 seconds later, I click the buy to open button. I am now on bid at 310, and let's just count. 1, 2, 3, 4, 5. 5 seconds later, I have now filled that position back at $3.10, and let's count another 5 seconds. 1, 2, 3, 4, 5. 5 seconds later, the bid is 330 by 380. There's no way I could have gotten back in had I not placed the bid when I did. And now you'll see Tesla starts dropping again, so I'm fortunate enough to be able to sell the position back at like $4.15 or something like that. Point is, that trade's not possible if I don't make that tactical execution a part of my strategy. If I don't place my buy order as soon as I exited my sell, I'm not getting filled. Granted, 310, hey, maybe I got a little bit lucky. If I place it at $3, I might not have filled. If I place it at 290, I might not have filled, but I did fill. So I'm not going to second guess all that. The thing to take away is by placing the buy order right away, I allowed myself a flip opportunity, and I was fortunate enough where it worked out. The other takeaway is that was expiration Friday, so the premiums are going to move faster. There's going to be wider spreads, but that's something I want to do more of. I don't do it often, but I need to do it because things like that, it works out. I think click play again here. I should be able to sell this at $4.15, $4.20, literally within another 15 seconds, I believe. Now the one thing I could have done better is I could have placed an ask, to sell into this move, but I think in my head, since I'd already made decent profits, I was trying to maximize as much as possible. Alright, so I did sell right there at 425. Alright, so that's just something I want to show you because, even if you're trading stock, the same principle applies. When you get out, you should know, hey, where do you want to buy back? It shouldn't be a time-consuming process to figure out where you want to buy back. You don't need to go back and be like, okay, well, let's see here. The stock traded at 330. I'm going to try and get back in at 328 on the dot. It's like, no, dude. Like, if you're in a rhythm, you should just be snapping away, be able to get moving, and you'll be surprised if you just let your hand move the mouse and type in stuff. You might be surprised by what ends up happening, just like I was surprised by how well the execution ended up being. Alright, so that's all I've got for you guys tonight. At this point, I'll open it up to any questions any of you guys have. Monthly options, do they expire this Friday? If this Friday is the third Friday of the month, then I believe the answer is yes. This is a weird month because there's 5 Fridays in a month. There's not usually 5 Fridays in a month. I'll have to double check. I don't know for sure the answer. I believe monthly options expire this Friday, but I can't confirm that 100% for you.